Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I'm Ryan McQueenie, an associate stock strategist here at Zach's, joined by one of our editors, Maddie Johnson.
Hello, today is Friday, October 26th. It's the start of Halloween weekend, and we are here to recap this week's biggest stories from the investment and financial world. Stocks took a tumble on Wednesday, pretty much erasing the year-to-date gains of at least two major indexes and proving that a number of market-wide and industry-specific headwinds are still weighing heavily.
We did look for a bit of a rebound on Thursday amid strong reports from a few of our market leaders. And then that did happen. And then from what it looks like on Friday morning, looks like the reverse is going to happen. So we'll see where we go next. But before we get into all of that, I think let's take a closer look at Wednesday's volatility because it was cray-cray.
Yeah. So just to recap, the S&P 500 fell 3.1% on the day and turned red for the year. The Dow Jones Industrial Average dropped more than 606 points, also bringing it below its 2017 close. Meanwhile, the tech-heavy NASDAQ composite fell 4.4% and finished in correction territory.
It seemed like a few of the things that we've been talking about for a while now, the last few weeks at least, reared their heads, and we got like more verifiable evidence about the fact that they're out there. Mm-hmm. For example, the latest data from Caterpillar showed once again that ongoing trade disputes and new tariffs are causing input costs for industrials to rise. Cat was able to overcome those costs this quarter and reaffirmed its guidance, said we're doing okay because our business is strong. But I think it was like, not everybody's Caterpillar, but if
exactly,
the input
not
costs
everyone's a giant us.
Right. And then on the other hand, you also had semiconductor giant Texas Instruments warning that demand for chips was weakening, which gets to that cyclical nature of the semiconductor business we've discussed several times. So I don't want to say worst fears confirmed, but it kind of felt like that at some points during the day.
Yeah. And there were several technical triggers in the familiar headwinds of rising interest rates, uncertainty abroad, and the sluggish new home starts. Those were all enough to inspire caution this week. But nevertheless, we do have a handful of positive earnings reports to chat about today, so let's get to it.
Yeah, everything just diving right below its 200-day and all the moving averages you don't want to see. But we did have Microsoft on Wednesday afternoon, so it was kind of like, hey, we desperate after this horrible day of selling, especially in the NASDAQ. We really need these tech leaders to pull through. And Microsoft, did the best they could. Earnings per share came in at $1.14. That easily outpaced the Zacks consensus estimate of 96 cents. It was up 36% year over year. Revenues were up 19% to $29.1 billion, basically, topping the estimate of about $27.7 billion. Azure, we've definitely said it wrong on the show, and I don't know. We got to a point where we knew how to say it. Now I don't know what it is.
I always read it as Azure, but I think that's wrong.
Okay, so Azure then?
I think it's Azure.
Okay, so we'll go with that. The public cloud segment, it was up 76% in the most recent quarter. They don't tell you the actual total. They just tell you the growth rate. That was interesting, though, because it was down from the growth of 89% in the previous quarter. It saw 90% growth in the year-ago quarter. But we're talking about 76% growth on top of 90% growth. Like, at some point, like, you can't hit 90% every quarter. So, still pretty good there. Sales of Office 365 and Dynamic 365 were up 36% and 51% respectively. The overall productivity and business processes segment, which includes Office, Dynamics, and also LinkedIn, brought in $9.8 billion in revenue. That was up 19% year over year.
Sorry to interject, and I wonder if it's because LinkedIn is now like basically a dating site as well as a site to find a new job. Just hot take, but throwing it out there.
Yeah, maybe getting a little bit more social. I did see something interesting about they rolled out more premium options in the quarter in terms of ways that they generate revenue from it. So maybe not quite Tinder yet, but something along those lines. Guidance was also pretty good. CFO Amy Hood told analysts on the conference call that the company expects 31.9 billion to 32.7 billion in revenue in its fiscal second quarter, which would include a contribution from GitHub. We covered that contribution on the show. That acquisition actually hasn't closed yet, but assuming that it does on the pace that they want it to, they will get that contribution in this quarter. Analysts were expecting about 32.3 billion-ish in revenue. So that's upbeat slightly, definitely on the higher end of what analysts were expecting. Microsoft tried to save the day, rallied on Thursday. We'll get into what's caused some volatility in Thursday after hours trading. But we had another pretty solid report on Wednesday afternoon, and it was from a company who we said, the market really needed Microsoft to come through. This company needed to come througugh for its own investors.
So Tesla, they reported earlier this week, and they actually bumped up their report.
Yeah.
They were supposed to report, I think, 2 weeks from now, in the early November. But they're like, no, we're gonna go much earlier.
Which was like a great debate of, is it bad news and we just got to get it out of the way, like rip the Band-Aid off, or is it we have such good news to share we just can't wait on it?
Like an excited kid, but it was good news. So they reported earnings per share of $2.90 in the third quarter.
Didn't misspeak. That's
that
right.
That is true. I know. I saw that number and I was like, this can't be real. Kind of like Amazon's last quarter.
Yeah.
Anyways, it is real. So this definitely surpassed the Zacks consensus estimate of a loss of 55 cents. The company reported a loss of $2.92 per share in the prior year quarter. So just like huge growth, huge profit in the third quarter of Revenues increased to 6.8 billion from 3 billion registered in the year ago period. This figure also topped the Zacks consensus estimate of 5.7 billion. So just huge beats on the top and bottom line overall. So during the quarter, Tesla delivered 27,710 Model S vehicles and Model X vehicles and 56,065 Model 3 vehicles to its customers. Total automotive revenues, including revenues from automotive sales and leasing, this number increased appreciably year over year to 6.1 billion in the reported quarter. So huge bump, huge numbers. Tesla's third quarter 2018 automotive gross margin, so this is a really pretty important metric for Tesla, was 25.8%. And this jumped at 752 basis points from the year ago quarter.
You just said a lot of crazy stuff.
A lot of crazy stuff.
You come into this podcast studio and you start saying all this crazy stuff and I don't believe it.
It was just kind of a mind-blowing report and shareholder letter to read through. It also great for shareholders of Tesla. They kind of needed it.
Yeah, definitely.
The company needed it in spite of basically all of the negative news over the past 2 months.
What would that
3
be?
months? I don't know, Ryan. What would it be?
And I will say, we've had some fun at Elon Musk's expense on this very show at every given opportunity over the past few months. I don't think, any of our criticism of him and his actions necessarily change.
No.
They do make nice cars. We've never said the cars weren't nice. People like these cars clearly, and they're finally starting to get them out to people and making money on it, and that's good.
Right, and that was the overall overall goal of Tesla, right?
Yeah.
So but for a long time it was it
didn't seem like it was doing it.
Yeah. So they just bought land in Shanghai for their second gigafactory, and that's the big goal of Tesla, to be this energy company, to have 4, 5, 6 gigafactories all over the world to build these cars, to have these big battery factories, and then to become this visionary energy production company that also makes cars.
Yeah.
It's just maybe this is just one quarter
Yeah.
out of many years of bad quarters. So maybe they'll get there one day, but this shows promise.
Yeah, definitely. Yeah, if
And
you
maybe-
want to
yeah.
get to that point, you have to be a darn good car company first, and
Exactly.
and they got to get there. And then I do really like that vision. So they did say you mentioned China in the second Gigafactory. They did say that they were pushing up their timeline for Model 3 production in China, and we'll have like production fully going over there for certain customers by 2019. So that would be next year. Other crazy stuff, $800 some million in cash flow. The earnings per share of 290 that you cited was the adjusted or the non-GAAP, whatever. And people, I think, will love to go like, well, there's just no way that can be true. But on a GAAP basis, it was still like $1.70 something in earnings, and you
that's
can't
like real
cook that
profit
revenue
now.
number, which is potentially the most surprising thing here is that revenue growth. So good quarter from Tesla. I'll eat my foot on it, I guess, if Elon Musk proves me wrong.
He just has to stop tweeting.
Just put your phone down.
Just put your phone down.
Go to your factory.
Just give
rouse
me,
the troops.
4 more consistent quarters of this.
Yeah.
I'll hop back on
Now-
back on that Tesla train.
Is a good take. Imagine what they could have been doing without these distractions. Is that a good take or no?
I mean, it's what we all want,
Yeah, I
right?
guess. But I do think we should. It's an American car company. I think we should be rooting for Tesla to
Yes.
lead us to the electric car revolution. Good on ya, Elon Musk and folks. Moving on from one enigmatic leader to the next, Jeff Bezos and the Amazon gang also reported this week, Thursday afternoon, and it was mixed, and I would say that meant it was disappointing. Thursday's rally off of Wednesday's crazy volatility was kind of like, seemed like an all-in bet on Amazon's report blowing everybody away. It was okay. It didn't quite blow everybody away, and stock is really sold off at the open on Friday because of it. Colossal beat on the bottom line, $5.75 per share, just crushed the Zacks consensus of $3.29. Again, we bring this up over the last 4 quarters. Really, it's been like these estimates don't even matter.
You're right.
It's just like they're not even close.
Yeah.
So it's tough to tell exactly what Amazon's up to on the bottom line because like the estimates don't have their finger on the trigger at all. That was up crazy for high from the 52 cents seen last year. So forget about earnings growth. It's too high of a number. I can't count that high. But revenues were $56.6 billion. That missed our $57.1 billion estimate. So that was kind of the disappointing part of it, was the top line. Operating cash flow, though, was up 57% year over year. Guidance also a bit late. We'll get to guidance in a second, actually. Let me jump into the revenue a little bit more specifically. AWS, everybody really loves an AWS. That's Amazon Web Services, the cloud computing platform. That was up 46% year over year to $6.7 billion. Subscription revenue, that's a big thing as well. That's Prime, but it's also Audible, Amazon Music, it's other services, anything that's a recurring year over year subscription. That was up 52% from the third quarter last year to $3.7 billion. And then the other revenue, this I think this is gonna become a major talking point here soon if it isn't already. Other revenue is basically all or largely comprises the advertising sales. We're talking a lot about Amazon becoming this advertising platform, cashing in on that. The other revenue was up 122% to $2.5 billion. So still a drop in the bucket, if you will, but definitely like one of the strongest growth rates we saw on that report. But then guidance was a bit soft, especially ahead of the holiday season, which is expected to be huge for retailers. Yeah. Amazon says it only expects revenue of 66.5 to 72.5 billion. The Zacks consensus heading into the day was calling for 73.9 billion in revenue. So yeah, that's actually, I would say, on the significant downside from expectations. So yeah, I mean, there's definitely some really positive things to note there. I think that huge earnings beat might have got a little bit more attention in a different market environment, but just where we're at right now this week, that top line miss, that kind of slightly weak guidance, or that weak guidance.
Yeah, the previous weeks of tech sell-off in general.
Yeah. And then we also had some huge reports this week. I was like, and wrapping things up with Google, which is nothing to scoff at.
So Alphabet, the Google parent, so they posted a big earnings beat as well of $13.06 per share, atop the $10.54 analysts had been expecting. Revenues came in at $27.16 billion, and this missed our consensus estimate of $27.32 billion. Ad revenues, though, grew 29% in the quarter, and paid clicks were up 62%, and these were offset by worse than expected cost per click, down 28%. So other revenues, and this includes cloud and hardware sales, came in at the Pixel. The
Google
phone.
Home, speaker guy.
Yeah. This came in at $4.64 billion, up a nice 29% year over year. Their other bets, which includes their healthcare company Verily, internet service provider Fiber, and self-driving car company Waymo. This saw revenue of $146 million, and this is up from just $117 million last year. But operating losses there grew too, up from $650 million in the year-ago quarter to $727 million this year. But I feel like that kind of makes sense, though. These are loss.
Yeah, they throw money over there. And
it's just like, just do what you need to do, especially with Waymo.
They basically only generate revenue from Verily and Fiber. Waymo, I mean, obviously, I don't know of any consumer applications currently for it, so I don't think they're generating any revenue.
No, not right now.
But you hope one of these becomes you take a shot on some of these, and you hope they become the next big thing. They moved, what was it, Nest? They moved out of other bets into other revenue.
Right.
Like, it's like you have been chosen, you have succeeded in your bet status, and now you are a part of our business.
Yeah. But yeah, Alphabet, I feel like they do well pretty much every quarter.
Yeah.
I feel like these numbers are consistent with what we see every quarter.
Yeah.
But they're a big enough company where at this point, until things in their other bet section, like you said, start like actually making money, then it's like kind of like something to get excited over.
Yeah, especially with the cloud and the hardware stuff, people really do, they get very excited about the home speaker thing and the Pixel and whatnot, because people are kind of already looking at a life beyond advertising, which I think is even more important as we continue to talk about these internet data privacy stuff, which has affected the social media companies a little bit more, but kind of should be the same thing for Google too.
Right.
So yeah, we'll see. But I think the same story is there with Amazon, where it's like everyone needed, we need more than what we typically see. And we typically see impressive, and we were impressed again, but we need to be like blown out of our socks, impressed by these two reports. We didn't get it. We'll see if buyers come in throughout the day on Friday. That would be certainly a great way to end the week, is we see some large volume buying in the afternoon on these lows, and maybe we can spot a bottom there. But if not, who the heck knows? I'm going to stop saying maybe we found a low here, because I've been wrong about it over the past few weeks. So,
but next week we have Facebook, we have Apple, so two big reports to watch. I mean, this was just like the tip of the iceberg of tech reports this week.
Definitely.
We also had Twitter and Snap, which I feel like those were earlier than normal in the season, but I could just be very wrong.
Twitter crushed it. Twitter
was
up like
also crushed it.
With
They made more money with less users. I don't know how they swung that, but they did it. But yeah, so Facebook and Apple next week.
Ever heard of them?
I don't know. Who are those guys? Yeah, so just getting started with Q3 earnings. And it'll be, just more and more. Keep
And
coming.
we'll definitely be covering those 2 reports next week. We'll have everything you need to get through these stretches of volatility. I think that is going to do it for us this week, though. Try to get everything in there. Definitely a busy week. Felt very long just looking at the charts all week. But reminder, shoot us an email at podcast@zacks.com if you want us to cover a different story, if we thought we missed something, or if you just want to say hi. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. We're available on Spotify, SoundCloud, Stitcher, everywhere you can find a podcast, basically. And thank you so much for joining us this week. We'll see you next time on the Zach's Friday Finish Line.